Hi everyone, happy February, and thanks for tuning in to my Twin Cities housing market update for this month. Hey, with temperatures in the 40s and even the 50s, February is starting out a whole lot more like March, or maybe even April. We're having a winterless winter here in the Twin Cities. And given the weather, I was kind of hoping we were going to see more signs of spring in the real estate market too. And there definitely are some, but things are still kind of dormant. And that is fairly typical for this time of year. So before I get into the numbers this month, I want to note the numbers I present here are for the month of January, and they are drawn from the North Star Multiple Listing Service data. All right, I want to start this month with home prices. Home prices remained steady in January. The median sale price for all home types in the 7-county Twin Cities metro was $370,000, which is pretty much where it's been since October of last year. And that's only up about 1% from a year ago. Prices were also steady in the core cities. The median sale price in Minneapolis was $317,000 in January, that's down about 1%, and $280,000 in St. Paul, which is up about 1.4%. So pretty consistent all year long. Now, the number of new homes listed for sale is one area where we are indeed seeing some growth. Yay for that. In the 7-county, new home listings jumped quite a bit in January. In December, there were just 2,061 new homes listed up for sale. And in January, that number rose to 3,314. That's a 62% increase in 1 month. Wowzer. So new construction listings were responsible for some of that gain. New home starts jumped by 204 in January and up to 900, which is, I think, interestingly, the highest number of new construction home listings in any single month in the past 5 years. It seems that builders are feeling more optimistic, which is great. Almost all of that new home building is taking place out in the outer metro in areas like Cochrane, Cologne, Lakeville, Otsego, Rosemount, and Woodbury, just in case you were wondering. So the metro saw a significant increase in the total number of new listings year over year last month. There were almost 600 more new listings in January than there were in January 2023. Now, there are a couple of reasons for that, probably. First, and possibly foremost, the weather. Last January, it was cold and snowy, and much of this January has felt a lot more like spring. Second, interest rates stayed under 7% throughout the month, and that was good news for buyers and sellers. And lastly, I think those two things, coupled with just some pent-up demand, folks who've been waiting for conditions to improve before putting their home on the market, just decided to go for it before everybody else did. So the good news is new listings, but although the number of new home listings for sale rose by 62% in January, the total number of homes for sale wasn't up by nearly that much, just 3.3% compared to the previous January. So if you're wondering, how does that make any sense? New listings are up 62%, but the total number of homes for sale is up just 3.3%. It's because the total number of homes listed for sale has been steadily declining for the past 2 years. The total number of new listings fell 12.4% last year and 10% in 2022. So if you're doing the math, that's 22% in just 2 years. In fact, the number of new homes listed for sale in 2023 was the lowest number of new listings in the past 20 years. You can see that on this graph from the Minneapolis Association of Realtors. So why are so few homes coming to market? If you've watched some of my market updates in 2023, you probably already know the answer to this question. Interest rates are the biggest factor here. Those pandemic-era, historically low interest rates drove a huge wave of refinancing, and now 70% of all current mortgage holders have a mortgage interest rate below 4%. In October last year, the average interest rate on a 30-year fixed mortgage hit 8%. So the difference in the cost of borrowing has really kept sellers and buyers out of the market. The good news is interest rates have begun to drop at the beginning of last year, and that seems to have made a difference in both the number of sellers and the number of buyers. If interest rates continue to slowly decline, I think we can expect to see more homes coming to market. But I think we're also going to see more buyers entering the market, and that's going to increase competition for those listings, and we could see prices start to rise again. It's really all about supply and demand, right? So a couple of other quick points to note here before I wrap up. This is still a strong seller's market. The median number of days between listing a home for sale and when it was pending was 37 in January, which is actually faster than it was last year. And the supply of homes for sale is at just 1.6 months. That's down 0.2% from December. Sellers were getting between 97 and 99% of their asking price, and that is pretty typical for a winter market. So just to quickly recap, home prices are holding steady. The number of new homes coming to the market did increase significantly in January, but that might be the result of our spring-like weather more than anything else. Supply remains a significant issue for home buyers. In 2023, the number of new homes listed annually was the lowest that it's been in the past 20 years, or maybe longer. All right, so that's what I've got for you this month. Thank you so much for watching, and I'll see you in March.